Welcome to Trading Lounge and the Australian report, but I want to start with the S&P 500 here, and this is what we're looking at here in terms of wave 1, wave 2, and 1 and 2 and 3 and 4, and looking at 5 here, and looking for a correction at the 2,200 area here. And it may not quite reach up there. I'm not quite sure yet. It does look a little bit short, but let's see how we go. This is what I've always expected here, and this is going to reflect back across other markets across the globe as well. So just to point out here that wave 2 here was sharp and simple. So in the guidelines of alternation, we would expect wave 4 to be sideways and complicated. Now, that obviously hasn't happened yet, but we can pick the footprint up from here. So wave 1 here was sharp, and wave 4 here took much longer, didn't it? This one here took, say, 2 to 6 hours a day, basically. So this one here would have taken a few days or 3 days. So this one here this one here is what it is. So if we times that by 3, then we'll get some sort of idea of the size and time of this one here roughly. So we would also expect this market to correct in the correct range here. So this is the first range that we look at from top of group 1 down to group 2. But in this case, we may have to bring it down to 50 to the wave 4 of 1 lesser degree, because this wave 4 here and this wave 4 and this wave 4 over here, I've just drawn a little trend line across here. So we may just end up in group 2 here. So there may be a slight edge for error here, but that's sort of what we're looking at here, and this is the same for the Australian market as well. So I've just readjusted global counts somewhat, because the same counts, just slight adjustments, because I always take the most conservative view when we're going to the upside, because that way we can manage the risk better knowing the downside. So on the Australian market here, and just starting from the daily chart here, now being conservative once again, is that I've labelled this an A wave and a B wave here, and 5 waves for a C wave here. So after these 5 waves complete here, then that can be the end of it. But at the same time, there's possibility for a larger move to the upside as well, and that means that we would label this A wave here as wave 1, like we have done in the US markets, which is probably correct. But I just don't. There's a big account behind the Australian market that needs, I just can't forget about it. Do you know what I mean? So I need to work both counts, and it will become apparent at a particular point in time after this is completed. Once this 5th wave here is completed, if I see the move down is actually a corrective pattern, then I know that we'll change this wave 1 here to the main count. But until that occurs over here, I just won't do that, because we need to manage what we have. Now, the other point here too is that even in a correction, an A and a B and a C correction, the A wave here in terms of length normally has some sort of equality to wave C, from wave B to wave C here. So these little yardsticks here are just kind of measuring that out a little bit. So that's sort of our main target sort of area up here. And of course that will be open to adjustment as well. We do find, however, that the Elliott wave count is based on a Fibonacci sequence as it unfolds in the expanding spiral of the universe on that 61.8%. And us humans, we forget, but we're also nature as well. So our thinking and actions come into the fold, governed by weather and all the other food and things that are all based on the same premise as well. So it all fits quite nicely, and as always, I'm always looking how the wave structure fits in our price ratio here using Fibonacci as price. It's always very helpful, and for the S&P 500 to have its wave 3 and 4 across that across this 2200 here, because it had the wave 1 here, then we normally find that the next correction is at the next level here, and then we would look up to 2300 here for the following one, and it working within the ratio, you know, of building, not that between 1 and 2 is 61.8%, but as it moves up here, the further it goes up, the truer the 61.8% becomes. So it's all part of that growing sort of spiral thing. So coming back to the Australian market, after waffling on there a little bit, looking for the correction across here, across the 5,500. And then the next correction at 5.8. Now, there's, of course, other important numbers in all of this as well. So on the 4-hour chart here, just diving in here a little bit, this is what I'm thinking here. This would, you know, in the US and also here as well, I had this as wave 3 and wave 4 here, but it's just too small, you know, and so I knew that I've made a mistake, and I've gone over it quickly. The mistake could be that I called all this as wave 1 here and wave 2 here, where it's possible this can be wave 1 and wave 2 here, then wave 1 and wave 2 here. So the error could have been made in here. There's also another place that I could have made the error from in here as well. So I haven't resolved that totally yet, but it's really not that important actually, because I know sort of where we are in things, but it may come important from the 38 for the 38.2 retracement level target area as well here. But as it stands at the moment, we're looking at this little structure up here to complete in 5 waves here, and then that will bring in the wave 3 here. And I feel quite comfortable with that as well. But we just need to be a little bit careful, because if you have a look at the bull market that worked up from last big bull market from 2,700 all the way up to 6,800 up that way, but as that was moving up there on an intraday basis, and on a daily basis you can look at it as well. This market has got a habit of you know, just even though it's creeping along here, it's got the habit of continuing creeping along. It's the ASX can do that. So I'm mindful of that as well, of most possibilities, not all of course, but most of them. And all the ones that sort of stare us in the face. But I just think what we do now is we just, from this low here, we just count our 5 waves up to the top here, and then we see what happens, you know, and let's see if we get a larger correction here, because, you know, the other thing too is that once we get the first high above the level here, there'll be some sort of high there at some point. So we can just draw the line across here and would go long from there anyway. So how far this comes down is the question. There is a little gap in here, so I'm thinking that this is not quite the 38.2 retracement level, but I will get that once I to get the top in here. Currently the 38.2 retracement level comes down here even further through here somewhere. I'll need to double check that, but it's not such a big deal at this point in time. And that's what we're looking at here. So just with that in mind, looking at the 4-hour chart and making slight adjustments. I haven't found the problem, so I haven't relabeled the bottom end of this, because I don't know if it's sitting on this one here and wave 2 here, or the problems in this little area through here. But it doesn't matter, because we'll leave this wave 4 here, and we're looking for the little 5 waves up here. It's always been our target up here, so I feel comfortable that we're here, and now we need to look what's going on here. All the traders that are in this market here, you have to be extremely careful now, because you know what you've made in the trend, you're going to give back, you know. Easy come, easy go. So the first thing that you should do is that realize that you're attached to the market. The attachment is real, it's deep. You may not even see it, but it's there because you're pulled to it. The first thing you can do is reduce the amount that you trade. So if you normally trade, say, 3 contracts, just bring it back down to 1 contract to keep yourself busy. But you're probably better off, it's trouble with stocks as well. The stocks are in a real problem. That's why I haven't put many long trades out, because I know that we're going to be facing this. and I didn't want to get caught with building in long trades through this scenario here, or all the way through here really, in the US, the UK and Australia as well. And a lot of stocks, when you look at them, they've come up, they're like this as well. They're sort of like just been at the top of their third wave here. So I'm looking for stock to do this. Not all the stocks are the same, of course, but I know where the general flow is, the main flow, and then here. So I will buy stocks once this pulls back in here, but I just didn't want to buy stock, above the I didn't want to buy stock in this section of our trend. It would just, I can feel the heat because people say, give us more trades and stuff, but, I don't know. It's just not sort of, it stresses me out too much, so I don't want to do it. So, anyway, look, this is where we are with the situation. I don't know how far this is going to pull back. We'll just have to wait till it unfolds here. On the 15-minute chart here, we can drill in. Right, let's just get a bit of a picture here. So, as you know, yesterday there was possibility for a further little move down into this area through here. I just didn't know, but I also understood what we had here as well in terms of corrective patterns. So our strategy wasn't really a day for analysis. It was a day for strategy to cover ourselves. So we were looking to go long on here. And if you've done that, then the wave 4 here, everybody will have their stops here, of course. Now, I don't know, this is what I know and don't know. So as the count goes, this would be up for 1 here. And I've taken this as an A wave and a B wave and a C wave to here. But what could be happening here is wave 2 could be over here as well. So then this would be up for 1 and back for 2 and up for 1 and back for 2. So there could be these series of wave structures in here that need to play out at this end up here. So I've just taken a conservative view and skipped one of those structures there, which was probably a mistake, but at least I've pointed it out. And the next step here, Thursday, today's Thursday, isn't it? Yeah, so Thursday's our bear day. Now, it never really looks like that because the market's up, but and it could prove me wrong as well. But we could be looking at Thursday opening higher, trading lower, and then having Friday and Monday as the bull days here to complete this top up here. Okay, I'm not quite sure, but once again, I've taken the conservative count, and I'm counting, forgetting about this one, but it probably play out later. But 1 and 2 here, and 3 and 4 and 5 up here for the third wave, the fourth wave. Now, the fifth wave here, if I can just grab my tool here, the fifth wave here just really needs to make a high above the third wave here. Okay, so this, I haven't pulled this apart here yet, but so we could just get a little, a move up here on the open on the cash market, a bit of a squeeze to the upside here, and then drop from that point. Okay, the other point here that it can do is it could move up here as wave 1, back for wave 2 here, then up for wave 3, 4 and 5 up here. So I've got the stop here below the 61.8% mark in here. Okay, so I just think that better off with the trailing stop rather than getting out, unless there's something really obvious and you want to sort of crunch it out a little bit. Just lifting the stop up as we go. So yeah, that's that. I think that's all. The other interesting thing with this too, with the global markets, is I know it sounds a bit wishy-washy, but the whole financial system is based off the equinox and solstice and so on, because of the first commodity markets being agricultural products. So they work with the seasons, and the accounting works with those as well, and obviously the moon cycle works in with the solstice and equinox and so on. And basically we've got a full moon now, so we normally find markets run up to the full moon, so that would leave us Thursday, today, Friday. So that will start decreasing from the weekend and into the Monday as well. So that fits in nicely with this market topping out here as well. And it's not so silly. I mean, in 1929 as well, the full moon really nailed down the top in 1929, and it did in 1987 as well. So there's enough evidence for those sorts of things, but I just find it more interesting than anything else. So, all right, that's enough waffling on. Thanks for tuning in. Cheers.